Hey, what's going on, guys? It's Suareezy here, back at you with another Market Mondays. Happy holidays to everybody and Happy New Year to all. Let's jump right into it. Today we'll be going over why chart setups for potential breakouts can become a profitable trading strategy. Alright, so first up we got Bitcoin on the 24-hour time frame, and we're going to go over the range that we're stuck within from the last 2 months. So we have 18.5 and about 15.5, and we have a few different channel ranges that we're actually playing within. So we had this channel range downwards that we ended up breaking and started forming this upward channel that we actually had formed. And notice both of these channels are pretty much the same range that we're playing within. And even this boxed range is the exact same size as well. Notice when we happen to break our upward trend channel right at our monthly level, we actually got 100% of that range down to the downside, and that's exactly where we started to kind of base out and support. So we noticed that this range here is actually a very key area for us to figure out to see if we're going to get a nice continuation or if we're actually going to get a reversal. So one of the main things we're going to be looking at is going to be the volume. Notice down here we actually did not break out of the last low. So since we did not break out of the last low, we're actually looking to retest our monthly level ideally if we can get the volume to back us up and take us up to that zone. But if we get to that zone, if we have enough volume to push us up into that zone, it's going to be a test to see if we can get multiple candlesticks forming above that monthly level, because if we can just get a single one, it would be ideal to get a movement like this, like we seen back in the middle of December, because we do want to see multiple candlesticks holding above that zone if you're looking to get the full continuation to that upside. Because notice if you do get here on volume and you have multiple candlesticks holding above that zone, ideally you are looking for a 100% move to that upside. And again, from 17.2 for $1,000 move, which would be pushing you at about 18.2, which would be the top of this trend line that we actually have drawn out. So that would be definitely something to be looking at, as we are very near a bottom support zone from the last low of the 18th. So other thing we're going to want to be looking at is going to be the volume for the downside. If sellers actually start to take control like they did here, notice the type of price action that can actually formate. If we do get the sellers to actually start taking control here, then we can actually see a reject of this level here and actually get the downside movement to retest the low. And that is going to be the true test. If that low happens to break, we are looking for a 100% move to that downside, which happens to put us on the last low that we had initially back in November, which is the overall low of the bigger range that we've been playing within. So that would be something to definitely keep an eye on, because notice if you get that movement and it happens to break, there's a $3,000 range that you just broke. And what were we just talking about with breaking out of ranges? If you break out of the range, you're looking for a 100% move to that downside or to that upside, depending what side it happens to break. So that movement could be a continuation movement to that downside if it happens to get there, because again, you have the range breakout potential of the downside move. Then got to see what happens at this low. If that happens to break, then again, you have a potential $3,000 move to that downside, again, potentially for a next support zone. So this strategy here is very key on being very patient. And notice I'm on a 24-hour time frame, so multiple candlesticks would be at least 2 days. So being able to figure and see these candlesticks formate near these support and resistance zones is going to be very, very key for this type of strategy. But before we jump into Ethereum, if you haven't liked, comment, or subscribed to the channel, make sure to do so and hit that notification button to know when we're dropping new videos in 2023. Alright, next up we have Ethereum, and pretty much within the last 2 months, we can see we've been ranging between 1350 and 1050, so about a $300 range. And we actually have some trend channels that we actually drew within the last 2 months, showing the accumulation phase that we've been going through within the last 2 months. So this arrow that I have here is pretty much 100% of the trend channels that we've actually drawn. It's actually 100% of our accumulation phase from November to the beginning of December, and is actually 100% of the breakout from our upward trend channel down to our support zone. So we can see, just like with Bitcoin, that this range that we're stuck in is a very key level for us to pretty much make a decision on where crypto would like to go. So if we happen to get to this upside, we do want to look for 100% movement if we can happen to hold this as a true support zone. Ideally, we can come back up to this zone and reject, and one of the main factors we're going to want to look at is going to be volume. If we can start getting multiple candlesticks that have abnormal volume consecutively near this top portion, then we could ideally start utilizing this as a support zone. If we start seeing something like this formate, where we have no continuation of volume, then we could come up to this zone and actually reject and still stay stuck within our smaller range that we've been playing within, which would just give us an accumulation for a bigger move in the future. So again, one of the main factors here is going to be the volume itself. So if we're having to look for the breakout, looking for the breakout of 1225, 1281, to the downside, looking for 1225, 1150, and ideally to 1110 would be the next support zone. If you happen to get that downside move and this 1110 zone happens to break, again, realize on the bigger picture, the monthly, we're actually getting near a bottom zone. So again, if a bigger range is actually formating and we're near that bottom level and we actually crack that bottom level, you're looking for 100% move of that bigger range over time. So that's about a $300 range that we're playing within. So ideally over time you'd be looking for the breakdown of $300. So again, this is why we want to be very cautious at these levels that we're at and making sure that we have a plan being formulated, because if we do not, we can see major volatility going in either direction. And this is where we do want to have a plan in place as opposed to just reacting. So again, making sure that you guys are drawing your trend lines, drawing and making sure that you can see these potential support zones, and understanding accumulation and the ranges that we're playing within, even on a bigger picture level, even if you're trading on a smaller time frame. So again, making sure that we know where we are within the patterns and being very patient with how we're actually going about trading these assets. So that's going to be it for this week, and I'll catch you on next week's Market Mondays.